Lard Friese joins us now, the CEO of Aegon. Thank you so much for joining us again, Lard. Let's just get into the guidance first up. You were sitting up at about 1.1 billion previously on the expectations, now 1.2 billion euros. What is behind the increase in the guidance today?
Good morning, Karen, and thanks for having me back on the show again. Today we're providing the market with a solid trading update where our operating capital generation comes in indeed at 336 million, which is a very strong number, which allows us to upgrade the guidance for the full year, as you mentioned, to 1.2 billion. It is basically a proof testament to the underlying strength of our business performance. On top of that, the cash capital position of our operating units are strong. The cash capital position at the holding allows us to launch another share repurchase program of 150 million today, in addition to the 200 million share repurchase program that we launched earlier this year. Commercially, I would say the picture is a little bit more mixed with strength in areas like asset management, the workplace business in the UK, the growth of 19% in the number of agents in WFG, our network in the US, to 82,000 agents now, but also some weaker spots, for instance, in Brazil, where the business is suffering from some interest rate headwinds. But overall, I would say it's been a solid trading update, which demonstrates that the transformation of Aegon is well on its way.
Lard, last time we caught up, we were having somewhat of a grim conversation as the numbers were impacted by a higher death rate in the United States. Was that still a feature in the numbers today?
I mean, if you look at the interest rates in the US, I mean, the 10 years now at 4.5. What I've mentioned at that time, and I continue to mention that, is that, you know, interest rates for us up is, of course, better than interest rates down. But at the same time, what is even more important for the company is that interest rates demonstrate a stable pattern. And in 2023, there was a lot of volatility. We discussed that at that time with you, and that is never helpful for the life insurance industry. But what we're seeing now is a pretty conducive overall environment.
Lard, I think we're at cross purposes there. I mentioned the mortality rate in the United States. Do you want to just get into that? This was something that came through the high death rate, which meant that it had negative consequences in the previous quarter. Was that still something here? Because it seemed to be catch up on the medical side for people that hadn't had things checked out. They were delaying it under the COVID era. Then suddenly some of those health implications caught up with them.
Yes. Yeah, that's correct. I mean, as we said at the last quarter, where we adjusted our assumptions for mortality, we said that we needed to do that because post-COVID, especially in the older cohorts, we saw elevated mortality. And as a result, we took the associating charge for it. But at the same time, we mentioned that the operating capital generation and the earnings, operating result earnings, would benefit from that going forward. And that is indeed what we're seeing, and that is demonstrated by the operating capital generation increase that you saw coming through in the third quarter.
It has been a fairly large week in the United States as we're watching key Trump appointees' suggestions for major positions. Do you think there's any fallout for your sectors, whether it's on the health side, whether we see any changes around the interest rate environment? How are you thinking about the wash-up from a new Trump administration?
I think it's a bit too early to tell, quite frankly. Transamerica, our large subsidiary in the United States, has it's in existence since 1909, and it has throughout the decades always worked very constructively with both Democratic administrations and Republican administrations. And yeah, like we're looking forward to also have a constructive relationship with the next administration under new President Donald Trump. It's really too early to tell to see what policies are going to take hold. So I think we need to await, have a bit more patience and await the months ahead.
Well, there's a lot happening on this side of the world too. In the UK in particular, we had the Mansion House speech yesterday from the Chancellor. I know that you're backing the British Growth Partnership, and this is a way to get liquidity into the cash-starved VCs. And having had a very big conversation this week with VCs, they are really struggling for liquidity. So the fact that you're looking to come in with a fairly large backing here, what does it mean for areas of the economy that are looking to grow but need the funds to do so?
Well, we are very supportive for the Chancellor's plans to stimulate investments in the UK economy, and to also make sure that pension money, pension money can also be allocated more than it has done so far to the British economy. So we are indeed a a cornerstone investor in the British Partnership for Growth, which allows we're going to include it in one of our funds, a large funds with a scheme of 700,000 members, which allows them to diversify their investments for their pension plans into companies and businesses in the UK economy, which some of them are actually providing also good sustainable and societal effects, because they operate in the area of biotechnical and medical industries. So I think it's a very good initiative from the Chancellor that we are more than happy to support as one of the cornerstone investors in the partnership.
I'm curious as to how hands-on you will be as a company, because VCs were telling me this week, look, the hype cycle around AI has skewed the returns that they're seeing from the industry at this stage, 3 to 5%, which they said is quite low for them. And we know VC does well when it can spread its bets, getting some very big returns from some areas, managing losses from other areas. So will you be helping companies, investors manage the risk here?
Well, we are a large investor across the globe in many sectors. Artificial intelligence is touching many sectors. And we need to make sure that, especially when it comes to innovative companies, that you understand the risk returns well, and that you also offer funds and investment solutions for your customers that allow them to diversify their assets. So overall, I would say that if I look at the total fund portfolio that we're providing to our customers globally, and in total, that's roughly 900 billion of euros in assets that we're gathering and it needs to be managed. I think we offer a range of funds that allow our customers to have the right risk returns. When it comes to the selection within those funds of the companies that we invest in, some of it is managed by ourselves, and our teams are very well first to evaluate that. And some of it is also from other asset managers who are managing those funds.
And Lard, just quickly on the share buyback, this is a big one for those looking for some returns, 150 million euros. Do you want to just talk us through that?
Yeah, so after the transaction that we did closed in 2023 to combine our Dutch businesses with another listed company, ASR, we were paid partly in stock and partly in cash. We then embarked upon a share buyback program of 1.5 billion, which we have concluded over the last year. But since the capital generation and the capital creation strength of the company continues to be very strong, we felt that, since we didn't have other means to invest it with good returns, to do a 200 million buyback in addition to that earlier in the year. Today, our cash capital position is still strong, and as a result, we're launching another buyback. But there's another message we're giving as well today to the market. We are holding our cash capital position between 500 million to 1.5 billion to make sure that we have financial flexibility as we transform and grow our business. We have given guidance today that we will bring that cash capital range down to roughly 1 billion, the midpoint of the range, by the end of 2026. And this provides, I think, also clarity to the market on what we intend to do with the cash that has been built up in the overall company.
Lard, thank you so much for sharing that message with us and joining us on the back of numbers. Lard Friese with us, the CEO of Aegon.